Hi everyone, and thanks for checking out my YouTube channel. I'm going to have a look at WTI crude oil for today, having a look at what happened last week and what is the game plan for the coming week. I'm going to start with having a look at what's bullish for the market, what's bearish, and which scenarios I see for next week and which one I'm going to trade most probably. So yeah, hope you like the video, and yeah, make comments if you have any at the end. I'm happy to share with you and discuss. So let's get started first with the bullish things about oil at the moment. So we keep looking at the rig count. There's no dropping below 300, so definitely bullish. The trend is for the rigs to continue to go down, so expecting production to curb as well, and continuation, no sign of production resuming, so that's definitely bullish. We had actually at that time OPEC meeting that's finished. Not surprisingly, they concluded on extension of 1 month for the production cut. Don't think it will add a lot to the bullishness on the market because it was highly priced in, but it's still a positive that they're still having that sort of uniformity across the board of between the producers. The management is still increasing long position as we've seen in the quote report, and also we're having the $41 gap that's really close, so technically it's almost a vacuum to the price. So yeah, so these are the bullish arguments. So looking just on the chart quickly, so the 41 is very close to the closure on Friday was 39, so it's only about 2.5% to close the gap, filling entirely to 41. So in my opinion, we are going to go to that level, and that will be my trade for next week. Now, having said that, let's have a look at the bearish side, because I think the clouds are starting to gather, and we should be careful not overexposing ourselves on the long trade. First reason, the rig count is going down, but the US production is dropping at 11.2 from 11.3, so we can see now that the number of rigs are actually little impact on the reduction of the production, and the US are actually still producing a fair bit, even if lower than the 13 they had before the COVID-19 crisis, still relatively high. So be really careful not having too much expectation about this, because they will keep producing because they just need the income and want to keep the market share. So that's definitely bearish in my opinion, should we actually see continuation of or stabilization of the cut and staying above 11 MBD. Summed up over the OPEC plus cut reliability for some countries, that's been cleared up somehow today, and they I think a couple of countries like Iraq, Nigeria, some others, they promised to make it up for the cut they didn't do over May or June for the months of July or August. So we'll see if they can actually deliver, but it's a little bit definitely against the price moving much higher, should they actually get into problem with this cut across the board. Another thing that's quite bearish in my opinion is the dropping open interest. So once again, the quote reports has shown that the open interest has dropped while the price did actually move up. So from that period at 34 and on the close at 36, we've seen another open interest drop, a minus 8k contract, so definitely a concern again. And also during the last 3 days, we have seen that it was rather flat with some drop on the open interest over Wednesday, Thursday, and that's for Friday. We've seen that's an increase, but spread across months beyond September. So I'm not entirely sure this is actually really how that's gonna play next, but it's definitely not supporting the price to move much higher. Other bearish aspect is the management in net long is now at time of the court report, so which was on the 6th, so even before that large move up to 39, they were already sitting at 400k, keeping in mind that 450 is near the record, historical record in terms of the net long position. So the managed money overexposed, and that probably increased a lot again their position in that move. We will see that in the next court report, but they will bring them really close to the record. So at some point they will have to reverse these positions, and of course they will put pressure on the price. Technically, but that's more a short-term thing. We have a clear 1 hour divergence, and on the 4 hours here we can see a double top on the RSI here, between the top at 38 and 39, and if we drop to the 1 hour, it's even a bit more obvious here. On that last move on Fridays with a clear divergence on 39, that will give us a target at least to 37.5, 38, but we're having that trend line supporting the price with the 50 MA here, so 38 should offer some good support, which was a previous high as well, and expecting probably divergence to clear that level, potentially extending down to 37.5. So yeah, that's pretty much it in terms of the bear side. One more thing is the transaction volume that I mentioned before is happening actually on September plus contracts, so leaving July and August a little bit vulnerable in my opinion. We'll have to keep an eye on the spread. At the moment July August is 1%, but should it start increase a lot between say August and September, and we might see some issues returning, potentially about the storage or demand not actually keeping up, or the production increasing too much, something like this. But we need to keep a close eye on this, because I don't think all issues are actually resolved on this market. So for next week, so as for last week, I was looking for that pullback on the 36, following the nice breakout we had. That played out quite nicely, breakout here, and then we had another figure here with that triangle forming here, that we did break out as well at 37, and for the move to continue and close at 39. So something I'm not doing usually, but I did open short ahead of the weekend on that level, only half position just in case we jump up on Monday, to just reinforce that short, potentially up to 41. Also that wouldn't be really ideal for that position, so I will see depending on the price action, but that divergence here did work very well on the last drop from 38 to 36, and I believe we're going to see something quite similar, 39 to at least 38, potentially dropping a bit further down to 37.5. so that comes down to the scenario. So the one I'm going to trade is the scenario 1, which is the bullish scenario for next week. We're going to likely go for a 38 pullback, as we've seen here, so that would be something like this, continuation of that move. When I'm saying 38, we could potentially extend down to 37.5, and that would be a nice entry point to go long and reverse the position for accumulation to continue, and midweek here on the 9th or the 10th, potentially time of the inventory with another bullish inventory report maybe, and we would get a breakout and filling the gap here. So 39.6 retest, so that's potentially for the first 2 days. After we bounce back, we test again, potentially consolidate a bit further here across that trend line, and before we actually move up for another test and break out higher. Yeah, scenario 2 that keeping in mind, just in case 38 would break down, so instead of stopping here we would actually continue down, and we could actually go as low as the 4 hours target here, clearing the divergence potentially we're having here, but that divergence not extremely obvious, so the price will struggle to go that low and potentially meet the 50 MA here. That would be a 36 retest, previous resistance becoming solid support now. So that could be another one, pull back to 36, and again the same scenario. Should we not see any catastrophic drop below 36, we could have a nice entry point for another accumulation and a move higher to fill the gap. So yeah, that's my game plan for next week. As usual, if you have any comments, just please share. Happy to have a chat, and during the week if you want to discuss or share your opinion on what you do, the trades, just share it with me in the comments, and I'm trying to answer the best I can. And so yeah, on this I wish you a good weekend, success with your trades, and I speak to you soon. Bye.